Canadian Mortgage Weekly live today on September 15th, 11:30, and we're talking about inflation. What's happening with inflation in this market? Can you believe it? I know you've probably heard a lot of news coming out of the United States saying that inflation has gone up. So we're going to talk about that today here on Canadian Mortgage Weekly Live, here with 𝗀𝗏𝗏𝗃. And one thing that's for certain, I also want to congratulate all of you guys that are watching. We're 98 episodes into our podcast here. It's been a wonderful year just getting these podcasts out and getting all this information out to you all. With inflation numbers, though, we want to cover that today because it's a real important item, especially how it's going to affect the housing market and what will happen going forward for housing prices and all that. So let's take a look today. I got a special presentation here for you all, episode 98. And again, my name is 𝗀𝗏𝗏𝗃, and we're going to be covering some of these items as to how it's really affecting the market. So let's take a look at this. First of all, again, thanks for watching, everyone. Those of you who tune in religiously on our podcast here to see what's happening on Canadian Mortgage Weekly. Let's just see what's happening today. All right, perfect. So we're live here. We're live on Facebook today, live on Instagram, and live on YouTube. And catch us on Twitter as well. So what we have here is some interesting numbers coming out of the United States and how it's really going to affect the market. But first of all, let's take a look at the 5-year bond yield. What the 5-year bond yield tells me is what's going to happen with 5-year fixed rates in Canada. And 5-year fixed rates are the most popular fixed rate in Canada. A lot of the times people will take a fixed rate just to buy their home because it's one thing that really shows what's happening, really locks in the rate so the payments don't change, and it's a really secure way to get a mortgage. As you see, though, in June, we did have the spike in the 5-year bond yield. That's when interest rates for a 5-year mortgage that is locked in hit all-time highs. We were looking at rates between 5 and 6%. Since then, they have dropped quite considerably, and now we're looking at rates that are in the mid 4s to high 4s, some in the low 5s. So 5-year fixed rates have dropped since their peak in the summer. And with that, we're seeing a lot of people taking their pre-approvals, locking them in again, and just locking them in now before the rates go back up on the fixed rate side. So what we've been watching this, and the 5-year bond yield has remained steady in around just above 3% for quite some time now. So looking forward on this, we don't know what's going to happen other than the interest rate announcement on September 7th didn't really have that much of an impact on the bond yield, and that the inflation announcement that came out of the United States yesterday also really didn't have that much of an effect on the bond yield either. So let's move on now to some of these numbers here. Let's look at the Canadian inflation numbers. As you see here, I have a graph up here. The latest information we have for Canada is a little bit dated. It is from July, and inflation has been going up quite considerably. The Bank of Canada's target inflation rate is 2%. However, we see here that we are quite exceeding that for a number of months in a row. We have hit a high point of 8.1% in June of 2022, and that's part of the reason why the Bank of Canada did increase rates in July, and big part of the reason why they have increased rates again in September, on September 7th. Now, the rate of inflation did slow slightly in July there to 7.6%. And the numbers for August should be out any moment now. I hope to have those numbers out on our next episode next week on September 22nd, and we'll talk about them then. And I'm hoping that the inflation rate's slowing down even further in Canada. I know our Bank of Canada has been quite aggressive in making sure that they bring these rates down. So let's take a look at what's happening in the United States. The inflation rate in the United States, it went up and it went up yesterday. As you see here, this graph here, taken from Bloomberg.com, a great resource for this type of thing. The United States inflation rate was hovering in around the 2% range for 2019, 2020. And then in 2021, it did go up quite considerably. We were around that 4% range in 2021, which was quite interesting and concerning at the same time. And the forecast was for the inflation to go back down. And as you see here, if we remove gas prices out of the equation here, the inflation rate did go back up in September to 6.32%. So with that information now coming out of the United States and how United States quite is closely related to Canada in terms of their economy, we might see inflation rates also rise in Canada, which would then in turn affect people and their mortgages and the homes that they own. And let me tell you a little bit how this will affect you as a homeowner. For example, the Federal Reserve in the United States is getting ready to do another rate announcement in the United States. And this rate announcement will happen later this month. And because inflation came in higher than forecasted now for September, we can expect the Bank of Canada the Federal Reserve in the United States to increase rates between 50 to 75 basis points. I've even seen some news outlets report that there could be a 100 basis point increase in the Federal Reserve rate in the United States because of these inflation numbers and how they have gone back up. Remember, these numbers that have gone back up do not include gas prices because gas prices have been going down in the summer. So because of that, if the Federal Reserve raises rates in the United States and inflation does go up in the United States, it's quite closely related to Canada. Canada's inflation will probably go up. We buy a lot of our raw goods and our supplies and product from the United States. United States is Canada and United States are really large trading partners. So we could see Canada's inflation go up. And if Canada's inflation goes up in September, we can expect the Bank of Canada to become aggressive on rates as well. And this will in turn cause the Bank of Canada to raise rates again, possibly on October 26th, 2022. Now, if the Bank of Canada does increase rates on October 26, 2022, that's going to make it more expensive to borrow money. And what happens when it becomes more expensive to borrow money? Well, the mortgage payments do go up. And when mortgage payments do go up, that puts pressure on housing prices. I wanted to show a comparison between housing prices at our peak and housing prices now versus the cost of housing then and now. But I didn't have time to put that together for various reasons today. But if you are interested in that, maybe I can put that on another video. But one thing's for certain is that as house prices have been coming down because the rates have been going up, we've been seeing the cost of housing remaining the same. It's not like having a lower priced house is helping anyone right now because mortgage rates have gone up to compensate that. It's almost as if the banks are always going to make their money. Let's move on to the CDOR rate. This is a metric that I use and a lot of other brokers use to indicate if variable rate options are a good option versus the fixed rate option. And right now, the CDOR rate as of September 14th came in at 4.04%. And when it's coming in at 4.04%, it's showing that the variance to prime rate right now is 1.41%. So that is under 2% at this point. Because it's so close, it's really hard to say what is better. Is the fixed rate better? Is the variable rate better? If you were taking a mortgage right now, it really comes down to what your goals are as a homeowner. And it really comes down to how long you're planning to stay in the home, as well as, what your goals are for the mortgage of that home. Are you planning to take equity out in the next 5 years? Are you planning to break that mortgage for whatever reason? Things like that really need to be considered when looking at taking a fixed rate versus a variable rate. A lot of people, despite their interest rates going up, have remained in a variable rate mortgage or have still chosen to go ahead with the variable rate mortgage. And this is largely due to the fact that it costs quite a bit of money to break a fixed rate mortgage compared to a variable rate mortgage. And in that regard, if you're going to break a 5-year fixed mortgage, you will have, first of all, the rates aren't going up, and that you won't have to spend the money to compensate each mortgage payment going forward through the term of the mortgage. You'd rather then compensate the bank at the time you break your mortgage and pay all of those fees at the end when you're breaking that mortgage. Whereas if you take a variable rate mortgage, a lot of those have the smallest penalty of any mortgage available in Canada, and that's 3 months interest. And it makes it very easy to make changes, whether you're taking equity out or you want to move and take out a new mortgage. You want to do renovations or add a line of credit. A lot of the time you need to switch lenders for that or switch the mortgage product and break your current mortgage. So those are all considerations as well as others. Make sure you connect with me about what is best for you. I am available to take appointments to talk about that with you. Now, Bank of Canada rate announcement. We have one of these coming up here. It's going to come up on October 26th, 2022. That will be at 10 a.m. We could expect another increase if Canada's inflation follows suit with the United States. And we could also expect an increase if the United States Federal Reserve does increase rates later this month. Canada will probably follow suit. Last rate announcement, we saw an increase of 75 basis points. I know that in that regard, we are seeing a lot of homeowners now really consider locking in or taking variable rate mortgage with a static mortgage payment that does not change. All right, so we have the overnight rate currently sitting at 3.25%. This is quite high. I know that before COVID, or when COVID hit, the overnight rate did drop to 0.25%. So this is a large increase of the overnight lending rate since the beginning of COVID. So if you're interested in knowing more about what's happening with interest rates, join me on my live pre-rate show on October 26th at 9:45 a.m. I will love to go through that with you and give you an idea of what we are expecting at that time, what we've seen leading up to that moment, some of the news articles coming out, the growing perception of our clients as well, and what's going further down the road. Let's take a look now at the average national house price in Canada. Now, these numbers are still as of July 2022, so they are a little bit dated. We are waiting for those August numbers to come out. They should be out later today or tomorrow. They usually come out mid-month. And right now, we have seen houses drop since the peak in February, 23.8%. We've also seen activity drop. However, with a lot of the real estate agents that I have been speaking with in our local market and beyond, all of Ontario, we have seen activity pick up very strongly since kids have gone back to school. What does that tell me? It tells me that people still want to move, people still need to move, and houses will continue changing hands regardless of whether or not prices go down or up. If prices are down, it's actually still a good time to upgrade because you're selling your current home at whatever it is and buying your new home. If you're upgrading or upsizing, you're upsizing at that also lower price as well. So when prices eventually rebound, you will have the rebound on that bigger and larger house price. So take a look at this graph. It's interesting. We had a video that we put out on my Facebook page a few weeks ago about TD Canada Bank. They put out a video saying, they put out an article actually that I did a video on saying that house prices will drop 25% from the peak, which was February 2022. However, they've already dropped 23.8%. Will they drop more, or is this as far as they're going? I'm not sure. I would love to hear your comments in our comment section as to where you think prices are headed. I know with inflation going up in the United States, we don't know where they're going to head because that will put pressure on the cost of borrowing, which will put downward pressure on the housing market. So with that, that concludes this presentation. But what I wanted to do is just talk a little bit about exactly what we should expect. Again, just summarizing some of these inflationary comments that I made earlier. So if the U.S. inflation is going up, which it did, announced yesterday, we're going to see the U.S. follow suit, probably most likely later this month, with a Federal Reserve increase in interest rates. We're expecting an interest rate announcement of approximately 75 basis points, 50 to 75 basis points, with some articles coming out saying that they could expect the U.S. Federal Reserve to raise rates by 100 basis points later this month. So because inflation is going up in the United States, we could most likely see inflation continue to go up in Canada. And because, as I mentioned, Canada is U.S. is Canada's largest trading partner. We do get a lot of our goods and services from the United States. And if that does happen, if Canada's inflation does go up, then we should expect that Canada will follow suit, with the Bank of Canada increasing rates on October 26th. That might be a 50 to 75 basis point increase as well. I'm not sure how aggressive the Bank of Canada will be at the moment, because those inflationary numbers just have not come out yet for Canada as they have for the United States. So what will happen if Canada does increase the interest rates? Well, we'll see that mortgages will become even that much harder to qualify for. I know this year has been one of the lowest years for mortgage applications because rates have gone up quite considerably. Mortgages have slowed down. People are not able to qualify as much. I'm getting a lot of clients coming to me where they're saying, we have the income, we have the down payment, we have good jobs, but we don't qualify for a house right now that is priced in the market. We can't buy anything. And there's a lot of these people out there. There's a lot of these people now that are wanting to buy a home but can't. They have good jobs, they have low debt, they have the down payment, but because of where they're at, they just can't qualify for much at all. So if the houses become harder to qualify for because of the increase in interest rates, that will put downward pressure on housing prices, which should be a good thing for folks like first-time home buyers or anyone looking to buy an investment property. If you're looking to get into the market to buy, watch the market over the next few months to see what happens with housing prices. It'll be an interesting time to make that move if you've been waiting on the sidelines, and we'll see what happens going into the fall. As I know, as being in the industry now for 12 years, every fall I've seen the activity increase, and activity has increased this fall. People usually make their moves in September after the kids go to school. So we'll see how much activity does pick up this fall to help gauge what's going to happen going into the rest of the year. All right. So one thing I wanted to say again is thank you for watching. Next week on September 22nd, I will be celebrating episode 99. So that is quite fantastic. I'm really excited to be here doing that episode. I don't know what I'll be talking about yet, but inflation was something I really wanted to cover off this week. And we're going to be really close to episode 100. And episode 100, we'll be celebrating on the end of September, last episode of September, September 29th. And I got some special announcements to make on September 29th. In the meantime, thanks for watching Canadian Mortgage Weekly Live. My name is Joe Bladdock. I'm a mortgage broker servicing all of Ontario. We air this podcast out of Aurelia, Ontario, which is just north of Toronto, near Weber's Burgers. And we love getting this information out there. If you have any suggestions or comments about this episode or future episodes, please leave them in the comment below, or follow, like, comment, and share, and get this video out to your friends and family. I would love to see this information get out to your friends and family so they can help and be benefited by this information. And yeah, thanks for watching. We'll see you next time, everybody.